Joining us now is Gene Munster, managing partner, Deepwater Asset Management. Gene, why would this be good news?
Brian, before that, I just want to acknowledge that there is a near-term benefit undoubtedly from the tax credit. If we zero in on the numbers we're going to see tomorrow, this 400 and call it 75, 80,000 deliveries, about 40,000 of those are likely coming from pull forward in demand because people want to buy a car that's 15% less expensive. And so start there is that cheaper cars do sell more. But I think where the conventional wisdom kind of gets off track is taking a step back and looking at the bigger picture. In my experience, I've talked with a handful of people who have purchased cars, first-time Tesla buyers. And the first thing that they have said to me more recently is they are surprised by FSD. And what we saw was this sunsetting of this tax credit effectively has caused traditional automakers to slow their investment. Since the beginning of the year, when this became clear, we saw GM, Ford, Volkswagen, all make comments that they are, and Toyota, about cutting their EV factory output, the number of models, and in general, think about a 20 to 30% cut just over the past few months on this. And so the reason why I mentioned that commentary from people who are buying Teslas now about FSD, because they get that 3-month free trial, is that in fact, if these traditional car companies have taken the bait and decided to pull back investment in EVs because of the removal of the tax credit, it puts them in an awkward position because what's going to happen with autonomy, it's not going to slowly improve. We're going to have this breakthrough moment. And for them to monetize it, for traditional auto to monetize this, they have to have an electric fleet. You're not going to have a gas-powered EV. That's just not going to happen. Yeah. And so by them essentially underinvesting, they're not going to get to scale. It's a catch-22. And I think that they've really read the tea leaves wrong in terms of how to invest around the removal of the tax credit. Yeah,
and for the uninitiated, FSD is full self-driving. And I have friends that have it. They barely touch the wheel or the gas pedal or the brake pedal on their way to work. It just basically is almost like a private chauffeur. You got to be wary. You got to kind of keep ready. It's not 100%. I want to make that clear. How big of a technological advantage does Tesla have over some of its competition?
So on the production of EVs, again, that's the method that they're going to monetize. You have to sell an EV in order to sell FSD. On that perspective is that they're making vehicles profitably. When you compare to the rest of automotive, they're losing tens of thousands of dollars. I think Polestar was like $40,000 per vehicle. So I think that doesn't measure like numbers of magnitude of difference, but I think it speaks to you got to be at scale. You have to be manufacturing EV at scale to be profitable. So I think from that perspective, check the box. And then this other part of the equation about where they are with FSD and how close are we in the comment about March of nines, it needs to be 99.999% accurate or whatever that March of nines is for it to get the nod from regulators. From that perspective, it's really coming down to two companies. It's coming down to, of course, Tesla, and then I think what's going on with Waymo. I do want to mention Tesla. What they've been doing in Austin has been slower on the robotaxi. I believe they're seeing more interventions than what they were hoping to, which has caused that slowdown. And I think does speak to we're just not there yet, but I think we will have a moment. It's not going to be linear. I think it's going to be a breakout moment when it comes to the ability of these models to drive safely.